TD Bank just released a report predicting condo prices to fall even more this year. This is on top of the price reduction we've experienced over the last 2 years in Greater Toronto Area for condos. So in today's video, I'm going to break down this report by the Bank of TD and I'm going to show you where the condo market is headed. So if you get any value out of this content, then please smash the like button. And majority of the viewers of this channel has not subscribed to the channel. So I would really appreciate if you can please subscribe to the channel. And just to reintroduce myself, my name is Amrit. I'm an active agent serving Toronto and Greater Toronto Area. If you got any questions about real estate, you can book a call with me by clicking on the first link mentioned in the description below. So here's the report by TD Bank, and let's start with highlights first. So it says 2024 was another soft year for GTA resale condo market, and this trend was maintained in the first quarter of this year. I agree with this. It's been a slow market for the last year and a half, and by the end of this year, the condo prices likely have dropped between 15 to 20% from their 2023 quarter 3 peak. So let me show you a trend line of average prices for condos in Greater Toronto Area. So here's a trend line since beginning of 2023 up till now. Okay, so here you can see from the peak of June, July of 2023, the prices have come down, let's say about by 14% give and take. Here we go. And down the line, the TD report says we might see additional 10% decrease as well. So chances are we'll see a downward pressure. In my opinion, I do not know exactly how much downward pressure we'll see. Time will tell us, but we'll have to see and keep an eye out on. But majority of the downward pressure, I just want to clarify, is happening because of one type of condos. That are small condos, cookie cutter condos, which were recently built for like investors to rent those out. Those condos are not moving in the market, and that's why we are seeing downward pressure onto the condos. Those are the reason why condo market is under pressure, because of high supply of cookie cutter condos. On the flip side, the condos which have good layout in a good building, spacious enough, in today's market as well, they are moving fairly well. I'll show you a few examples in a second. But before that, I just want to show you some more data showing you the number of sales which happened this year for condos in Toronto proper. Just a heads up, this is not a data of GTA, just for Toronto. So here you can see a pie chart of condos, total number of condos which are sold in Toronto this year of 2025, since January 2021 up till now. And you can see they were just shy of 4,000 condos which were sold, and out of those total number of 4,000 condos, just shy of 4,000 condos, majority of them were sold with 2 bedrooms. So this goes to show the bigger units are moving. And on the flip side, and here you can see only 1% of condos were studios which were sold this year out of the total number of sales. So smaller condos are not moving. Even 1-bedroom condos, they were like 16%, just 17% condos were sold this year out of the total number of sales. And I want to show you examples which condos are selling and which condos are not selling. So I'm going to show you a couple of real life example on MLS listings. So let's get right into those. So here I'm going to show you a condo which took a lot of time to sell. For example, 197 Yonge Street, unit 4408, Okish building, and this sold for $450,000, was listed for $485K, and this took 62 days for this condo to sell. And if I show you the picture, it's not the I'm not the biggest fan of this layout, because if you see, the kitchen and living room are in the same space. Not the ideal. And if you see the bedroom, it does not have a proper door or has a window. So condos like these, they are putting downward pressure onto the average price in the market. So these type of condos are not doing that well. And if I show you the history of this condo, I'm sure they must have taken a loss on this one. So if you see, in 2021, this condo was sold for $576,000, and now as of today, they sold for $450,000. That's quite a loss. But on the flip side, I'm going to show you an example of a good condo which did fairly well. So 19 Grand Trunk, good building in my opinion, 3503 unit. This sold for $632,000, was listed for $650K, and was sold in 19 days in today's market, which is not too bad. Was a 1+10. If I show you the layout of the unit, it's not too bad in my opinion. It's pretty good in my opinion. So is it decent kitchen, not much of a wasted space. It's a peninsula style kitchen. And if you see the unit, it's livable condo, decent layout. And these type of condos are doing okay still. I'm not saying these are selling over asking. I'm not saying that, or the prices are increasing. I'm not even saying that, but they are still selling at a reasonable price point. Okay. And one more example I want to show you is 21 Widmer. This is again an example of a good condo. If I show you the floor plan, This is a proper box, not much of a wasted space. So these type of condos are also moving. So this condo is sold conditionally in 13 days. It was sold yesterday, so 12 days. So this was sold in 12 days, and we don't have the price point yet, updated price, because it's sold conditionally. So good units with a good layout in a good location and good building, they are still moving. And the opposite of those condos are still not moving. And the prices of those type of condos with not a good layout and not in a good building, the price of those condos are going down, and we will continue to see downward pressure on those condos for now. So let's go back to the report. And the second highlight it goes on to say is 2026 could bring improved fortunes for the market amid a supportive interest rate backdrop, waning tariff-related uncertainty, and stronger economic and job growth. So I agree, once the tariff chaos gets sorted out, there's going to be some optimism in the market. So that's going to propel market in some capacity. I'm not saying the prices are going to go up, but the sales will start to increase a bit, in my opinion, because there's so many people who are sitting on the sidelines to enter the market. That I agree with that. Further, it goes on to say, however, a chances of heroic rebound are likely low, as population growth will likely be slow and condo affordability should remain strained. I agree with this as well, because population growth is slowing, but I want to show you one more chart before I proceed. So here you can see the annual population growth, and as of right now, the government is targeting non-permanent resident and as well as international students. So that pool typically enter the renters market. So that's the orange trend line. The orange bars you can see, that's basically non-permanent resident growth, which is reducing drastically. And the blue one is the net permanent residents. So if you see, that's still being maintained. Permanent residents are still coming to the country. I'm not saying at the rate what they were coming before, but as per this chart, they're still coming in the country. So these are the people who enter the market in terms of buying, and the non-permanent resident, they typically enters the renters market. So in my opinion, according to me, this is going to more impact the rental side of things as opposed to buying side of things. But we'll see how things pan out down the line. But rents have come down, and I don't see rental market to grow in the next 12 to 16 months. That's number one reason is the annual population growth is slowing down of non-permanent residents and international students. And secondly, on the flip side, the supply is also increasing. So that's why we might even see rents further coming down. So now let's see the factors which is going to affect the prices in the year of 2025. First is population growth is slowing rapidly as the federal government's tighter immigration plan is unfolding, which we just discussed right now. And along with rising supply, this is downwardly pressuring rents, which we also discussed. Chances are rents are going to go even further down this year. And note that in the resale market, rents for the average one-bedroom apartment in GTA fell by 5%. And soaring rent growth is likely turning off investors. So yes, this is a good point, because when rents are coming down, investors are not so interested or not so motivated to get into the market. So they are also missing from the market, or essentially investors are dead right now from entering the market in Toronto market. So that is what is going to put further downward pressure in the market for sure. I agree with that. And if I go down, the next is trade war. That is uncertainty. Economic uncertainty is keeping potential buyer on the sidelines. Recent Bank of Canada survey found 25% of the respondents were less likely to make a major purchase given the trade tensions versus 70% who were more likely. And this survey was taken in late January. Okay. This conference board March consumer confidence report also showed rising share of Canadians thinking that it was a bad time to make a major purchase. So if I show you one more chart, consumer confidence plunges to historic low. So here you can see the consumer confidence level has come down to record low levels since the 2002s. I've had a lot of buyers who were thinking of buying this year, and they have decided to either hit their pause. I have personally seen that, but at the same time, some people are still making the jump. But whosoever they're making the jump in the market, we are telling them to buy, and if you want to get into the market, buy with intention, with a long-term mindset. That is, if you're buying with the mindset of at least holding your property for 5 to 7 years or even 10 years, essentially you're going to come out winning. But if you're someone who wants to live there for the long term, it's a good idea. If you're someone who's trying to flip or you're trying to sell in 2 or 3 years, it's probably not the best idea. It's better to rent instead. So the fourth factor, what TD says, is that we anticipate a level of condo completions to fall significantly this year. And indeed, they were down 17% in the first quarter. That said, the level should remain relatively elevated. As these units complete, listings will likely see some upward pressure as they did in 2024. So if I show you a chart for completion of condos completion data. So here we can see the highest level of condos being completed and being delivered in the market in the year of 2024 and 2025. In fact, 2025 has the highest. These are record highs. And in 2026, we're going to come back to normal, or like not normal, back to historic average. And by the year of 2027, 2028, we're going to see very low level of supply, basically very low level of condos being built and being delivered to the market, because right now builders are not building due to many factors. One of the major factors is economic uncertainty and economic factors, and there's very less demand of pre-construction condos or properties. So those are the factors why builders are not building. And by 2027, 2028, as I said, it's going to be very low level of supply. And beyond that, I think that's when by 27, 28, condos prices are going to make a comeback. So where the condo prices or condo market is heading for this year, I think we're going to see further downward pressure onto the prices, especially for cookie cutter condos. By in 2026, we might see some, I wouldn't say the prices are going to go up drastically, but we'll see more number of sales. And by 2027, 2028, once the supply problems kicks in, we'll start seeing some upward pressure for condos. But we'll have to see how things pan out, because there's so many external factors which affect the real estate market. So does it make sense to buy in this market? It makes sense for those who are buying with the long-term mindset, that is for 5, 7, or 10 years. I would definitely keep that mindset before entering the market. It makes sense for someone who has a stable job or a stable income coming in, because there is so much uncertainty in the market, especially job market is not doing the best right now in the city, or as well as in the country as well. So if you think you have a stable job and you think you are going to make those payments over the long term and you can going to stay put for long term, in my opinion, it makes sense. And there are going to be opportunities for, especially for first-time home buyers, because you can find a good condo with a good floor plan where you can have a good living experience at a good price point. And as well as for downsizers, there's going to be opportunity, because if you're selling a house and getting into condo market, you've got that leverage, because you'll be coming in, you're selling a house, because freehold properties or houses, they're still doing okay as opposed to condos. So you'll have that upper hand. And further, I would also run the numbers in depth, run your monthly carrying cost and run your numbers in detail and analyze, are you comfortable making those monthly payments? If not, then it's better to rent instead. But if you think your numbers are making sense, then it makes sense to enter the market. So these are my 2 cents today. I hope I was able to give you some value. And if you got any questions, feel free to reach out to me. Thank you so much for watching. See you in the next video.